All right, what the heck just happened to the stock of Salesforce? That's the king of customer relations management software. After the close, Salesforce reported a genuine miss. Several key lines were weaker than expected: revenue, operating margin, current remaining performance obligations, although the earnings per share number actually came in better than expected. Making matters worse, management gave a weaker than expected sales and earnings forecast for the current quarter. That said, I'm not sure it's justified to make it a total meltdown in after-hours trading. The misses weren't that big, and there's no doubt Salesforce is throwing off a ton of cash. They even raised their full-year earnings forecast. But we're so used to having this company do the right thing that I think it just took people by surprise. Perhaps it shouldn't, because the whole enterprise software sector that it belongs to seems under siege right now after what it looks to be over-earning during COVID. Earlier today, we got the chance to speak with Marc Benioff, the straight-shooting co-founder, chair, and CEO of Salesforce. Take a look. Marc, welcome back to Mad Money.
Great to see you, Jim. Thanks so much for having me, and hello from San Francisco.
Well, hello, and thank you for coming on. Look, I'm not going to dance around it. The stock is down the most I've seen your stock down in a long time. But the cash flow numbers seem strong. I'm looking at the operating cash flow. I'm also looking at the Salesforce margin. They both seem within guidance, so I'm trying to I need to rationalize why this is happening. Why have people decided that your business is definitively slowing? Right now, slowing, and that things are not as good as they seem?
Look, Jim, you can't always control the buying environment, but what you can control is your cash flow and your margin, and you can see the incredible growth this quarter is amazing. I mean, these are cash flow numbers that we've just never seen before, up 39% year over year to $6.247 billion in cash flow. Incredible. And you can see the margin is up 450 basis points to 32.1%. You know, this is a huge transformation that we've gone through over the last year, and this has been an incredible moment for our company. I mean, these are cash flow numbers that are even larger than Coca-Cola.
Well, if that's the case, then revenue guidance of 920 to 925, it is indeed below the 9.34 guidance. Why is it below, given the fact what you just said?
Jim, we're holding our guidance for the year at $38 billion, which has been incredible for us. And what we see happening is not only this amazing transformation in our core financials, but also the amazing AI transformation that we're going through as well. And you'll see some incredible new customer stories that are emerging with companies who are transforming themselves using our amazing new AI, including FedEx, Air India, and even Paychex. And I'd love to talk to you about that as well.
Well, let me just, before we get to that, I want to deal with this idea that things have gotten more competitive and maybe sales elongated. Is there something that I am missing which explains why people are taking your stock down 17, 18%, when it to me looks like this is a rather just typical good Salesforce quarter?
Jim, this has been an amazing year for us. We've completely transformed the financials of the company, and you can see that we're delivering, as I said, this incredible cash flow and margin number. So, look, I can't predict what the stock market does. You know that. Right. We've been through this how many times over a couple, I guess I've been doing this 25 years. But what I can tell you is that the most important thing remains the customer success, which is why how are we going to make these customers totally transform themselves, more profitable, better customer success using our incredible new AI technology. And that's what I'm really excited.
Okay, so let's talk about what you're doing with FedEx. Let's put it out there about why someone selected Salesforce for the largest one of the largest transport companies in the world. Why do they need you, and what are you doing?
Well, the opportunity of FedEx is incredible, and we've, of course, worked with Fred and Raj for years, but the idea now that we can really take their business to a whole new level of profitability and productivity is amazing using Salesforce Einstein. Now, you know, Einstein is already delivering more than 1 trillion transactions a week. But when you look at our customers overall, the power is, with this new generative AI capability, we can take the 250 petabytes of information that's stored in Salesforce and action that to create another level of capability for our customers. And with FedEx, what that means is they're able to sell services to their customers that before they had tremendous white space with. And we saw that in the quarter with an incredible delivery of the AI capability with Federal Express. And the other one that I just mentioned, Air India, you know, this is an amazing next generation airline that has acquired all kinds of different airlines in India to create the leading airline in India. But when they did that, they had lots and lots of islands of information But using our data cloud, they're able now to aggregate that information and using this generative AI capability to, again, deliver another level of productivity and capability. And this is the technology that I see as a catalyst for more growth with the company.
Okay, so
specifically, we saw more than 1,000 new data cloud purchases in the quarter. That's the second quarter in a row where we saw data cloud with more than 1,000 new customers each. And that is the kind of growth that we're looking for in new products and capabilities.
Okay, now you've talked about the transformation, and it is self-evidently gigantic. But do you feel the efficiency efforts are substantially complete? I know that you did cut your full-year adjusted operating margin guidance, so I would think that perhaps, given it's the margin guidance, that you're not complete and there's more work to do.
Jim, as I said, you can't always control the buying environment, but you can control your cash flow and your margins. And the growth that we've seen this year over the last 12 months in our cash flow and our margins has been just spectacular. And that's what we're going to continue to focus on. That's why we've also, we're able to deliver, incredible buyback this quarter. Of course, we've initiated our dividend as well. It's been a complete financial transformation. But not only that, it's also a complete transformation of the product line for customers, giving them this incredible new capability with artificial intelligence.
So what happened with Informatica? I know that you introduced me to them years before at Dreamforce. I know that they have some really terrific products. It just didn't fit.
Jim, we're looking constantly at every company that's out there, and unfortunately, investment banks can get a little bit ahead of themselves, or maybe we make a phone call to a customer to find out, what the strategic possibilities are, or partnership possibilities are with a company, and all of a sudden we see the news stories that we're acquiring this company or that company. And look, I'm a huge believer in innovation, you know that, and I believe in it in organic innovation and inorganic innovation. It's how we've created the third largest enterprise software company in the world. So I can't address specific rumors about any particular, M&A opportunity. But what I can tell you is that, we love that company. It's a great company. It's always been one of my favorite companies. And, when we look to have greater partnerships with them, I cannot, comment on whatever the rumor or speculation is.
People want me to ask you about HubSpot and Alphabet or you. And again, to me, HubSpot's another great company. It's kind of a mini Salesforce. But I don't necessarily regard them as someone who is nipping at your business right now.
These are great customers of ours, Google, HubSpot. I get back to our customer success. What is it that's making Salesforce successful today? And you can look at, another company that I think both of us love so much, CrowdStrike. We had an incredible transaction in the quarter, completely transforming the company in sales and service, helping them to build new products. Again, using AI, helping to keep their costs down while delivering these incredible new capabilities.
So what I'm hearing is that, yes, you can't control the stock, but the environment is not so bad. You're not giving me the environment's gotten weaker, it's gotten tougher in Europe, it's gotten tougher in Asia. I'm not hearing that from you.
Jim, you can't control the buying environment. The reality is you're going to have heterogeneous buying environments. It's going to happen, and we're in this post-pandemic reality where the buying environment has been, and we've talked about this now for a few quarters, been very measured for enterprise software companies, not just a company like Salesforce, but many companies. So what are we going to focus on? We're going to focus on improving our cash flow and our margins. Well, look at those numbers, Jim.
No,
those
the numbers
are awesome numbers.
The numbers say to me that if the stock's at 230, why don't I just, if I were you, I'd just stand there. I'd stand there at 230. I can't control the stock price, but I can control my buying of my buyback.
Yes, and we're going to focus on our customer success. And these great companies like, FedEx or Air India or, a CrowdStrike or even like Paychex is another unbelievable story where we completely transformed the company this year. The technology that's happening right now is awesome. So for CEOs, our opportunity is to go in and continue to show them the incredible opportunities that are at hand and deliver that and show them what they can do in this incredible new world that we're all in now.
But what did happen to enterprise software that we've decided it just doesn't have the, let's say it doesn't have the moxie that engineering software does right now?
Well, I don't think that that's it at all, Jim. I've said it a number of times over the last few quarters, and I think it's a little bit hard to understand that, we went through the pandemic, and during the pandemic, enterprise software surged, and companies, aggressively bought enterprise software and put in all kinds of next generation infrastructure. And in this post-pandemic world, they've really worked to, I think, absorb a lot of that technology that they've put in. And while that's happening, you're also going through this AI kind of renaissance that's happening. So those things have to be rationalized for these companies. You have to say, you look at our numbers, we still sold a massive amount of software in the quarter. It was unbelievable how many deals we did. I mean, our deals over $1 million, Jim, were at record levels. So we're still selling massive amounts of capability, and we have incredible new products like Data Cloud. We're delivering against benchmarks.
You
that
are. I would love
high.
to think that my questions are an abstraction, and what matters is a single source of truth that you're telling me about how the company's doing. I'm trying to rationalize the stock price, which is my department, with the selling of enterprise software, which is your department. And right now, my department is trouncing your department, and that's why I'm asking these tough questions. Not because I'm saying, you know what, Mark, it's great to see you. It is great to see you, but now at least we understand.
My department is getting the cash flow to move, getting the margins to move, and also delivering the next generation of innovation, making our customers successful. That's what I always am focused on. That's what we focused on for 25 years.
And that's exactly what you should be focused on.
That's
exactly what you should be focused on. I want to thank Marc Benioff, co-founder, chairman, CEO of Salesforce, who does not shy away from anything, and basically he's telling you, listen, this is business. And there we go. Mad Money's back after the break.
Coming up, want to split a burrito? Cramer chats with Chipotle, and there's plenty on the menu. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.